Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 230 for July 8th, 2019. Today we will be discussing report number 302, and you should be seeing that on your screen while I'm talking right now, but you can also get your own copy by going to TimingResearch.com/reports, and you can get access to either the web or PDF version there. We are broadcasting live on YouTube at 1 p.m. Eastern Time, but you can also listen to the audio-only podcast version through your favorite podcast directory. Just search for Timing Research and subscribe. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have arranged for Erik Gebhard, Jake Bernstein, and Simon Klein to join us, and Simon is moderating, so I'm going to go ahead and turn it over to him.
Hi, thank you, David. It's great to be back here and moderating again. And welcome to our first-time guest, Erik Gebhard. It's great to have you, and it's great to have you as well, Jake. I know we've been on the show maybe a couple of times before. It's great to have you and great to hear your words of wisdom on the markets. So what we're going to do is we'll start, and everyone will introduce themselves and talk a little bit about their website, about themselves, how they came to trading, what they do. And we'll start with you, Jake.
Okay, thank you. Pleasure to meet you, Simon and Erik. And David, thanks for hosting and doing this show so many times. I'm sure people get great benefit out of it. It's a wonderful thing you're doing. So what about me? I've been trading for 52 years. I've written about 45 books. I'm a real trader. I trade practically every day. I trade short-term, long-term, and immediate term. My trading is primarily indicator-based. I'm purely technical. I don't look at fundamentals in any way, shape, or form. And I use some very simple indicators, and I use a procedure called setup, trigger, and follow-through. Every trade needs a setup. Every trade needs a trigger. And once we have the trigger and the setup, we follow through with a specific target to reduce our risk effectively to zero. So, Simon, questions today? Is that the way we're going to do it?
Say what?
Are there going to be specific questions for us today?
Yes, we're going to go and ask questions about the market, and according to the report. We're going to go through the questions in the report, and we're going to go through like roundtable, ask everyone.
So why don't we start that way with me?
You want to ask the first question? I think let's move over to Erik and let him introduce himself, and then we'll go through the questions.
Sure.
Is that okay?
Absolutely.
Okay, yeah. So Erik, first time here, Erik Gebhard. So would you like to introduce yourself? Tell us a bit about what you do, your website.
Yes, very good. Thank you for having me, everyone. So that's a hard act to follow, Jake, but I'll do my best here. I've been trading since 1991, and sometimes in the past, people have asked, how do you get involved in a business like this? And kind of got me thinking recently, and I actually found an old textbook from college, an investments course, and I looked through there, and sure enough, there was a section on options trading, futures trading, and I actually was taking notes. So I have all my footnotes and scribbles in there, but I do remember this was when Iraq had invaded Kuwait, and crude oil, I think, had gone from somewhere like $20 to $40 in a matter of maybe a week or two. And we were using that as the backdrop in our class to study options trading. And that stuck with me. That made a big impact on me. I thought that was pretty incredible. Futures and options and the power of these financial instruments and the flexibility. And I didn't really know exactly what it all meant at that point. Of course, you're still in school. You know how it is in school. You don't really have a lot of perspective yet. At least I didn't. But after graduation, I did get involved in the mutual fund business with my Series 6 and 63 licenses, and then the options market kept whispering in my ear, and I was actually pursued a job at an options brokerage firm, and that's where I cut my teeth in the options market. One of the owners there was an author, and he gave some seminars around the country, and so he was able to work with me and help me out quite a bit. And eventually I was able to work on the newsletter and generate trades for the hotline on option spreads. We're doing a lot of spreads across basically all commodities, but we tended to focus a lot in certain segments where there's a lot more liquidity and volume. So eventually I moved on to a couple of other brokerage firms, and long story short, I started my own brokerage firm with my business partner, Mike, and that was in 1997. And we're called AltaVest, so we trade futures and options. And I guess you could say our specialty now is option spreads on the S&P 500. So we built a proprietary platform, has an algorithm that generates option spread trades, and then we'll automatically track those trades and manage the risk for you. And there's also a trade simulator component, which I might be able to show a little bit later. And we also have a trade alert functionality that ends up in your smartphone, and then you just touch accept or reject, and then we transact the trade from there. So that's what we do.
Okay, thank you very much, Erik. And you can probably see my screen. I'm sharing at the moment. And a little bit about me, for those of you who are here for the first time. If you're not, you probably know a bit about me anyway. I've been in the trading environment since 1996 when I graduated, and I started working at Credit Suisse in London and then in New York. And I started as trading equities in 2005 after passing the Series 7 exam. Those days it was the NASD, and now it's changed to FINRA. And I started TradeSmart, and the website's TradeSmartForex.com a number of years ago. And we basically focus on a trading education business that focuses on teaching people how to read the market professionally. And that's basically without using any indicators. Primarily, we're not indicator-based, we're price action-based. And how to run a successful trading business, which includes how to develop your own trading plan, and very importantly, strategies that fit your personality and lifestyle. It's very difficult to trade someone else's strategies if they don't fit you, and you can only be successful in trading a particular strategy once you make it your own. So you can take someone else's strategy, but it has to be a good fit for you. Much like going into the shop and putting a suit off the peg, and make sure it's the right size, otherwise it's not going to fit you, that sort of thing. So that's what we're primarily focused. Our expertise is reading the charts, and that's our main edge. Understanding how to read the charts first and what you're looking at, understanding of the market moving up or down, where the levels are, and then being able to engage the market with a strategy that puts the odds in your favor and enables you to manage risk in the correct way, so that you have, over time, a positive expectancy and are able to make money consistently in the market. That's our goal. And again, it's based primarily on market reading, on becoming an expert at reading the charts. Okay, so that's about me, and let's move on to the main question in the report, which is on page 1 of the report. We have a question to figure out. Maybe we'll put 2 of the questions together on which direction you think the S&P 500 index will move from this coming Monday's open until Friday's close. That's July the 8th until July the 12th. And maybe we'll start with you, Jake.
Sure, absolutely. So I always let the market tell me what to do rather than trying to tell the market what to do, because that won't work. And one of the things that I've discovered, which is no surprise, is that the trend is your friend. If we examine the current trend of the market, the trend is clearly up. So that's the path of least resistance. But I also want to know, from an historical perspective, what does the market usually do this time of year? I want to be very specific. So, David, if you could help me share my screen here. I keep forgetting how to do this.
Yeah, it's just the menu on the left side of the window. There's a green screen share button with a white arrow in it. You just click on that and then select the window you want.
Okay, one moment, please. Let me do that. And does anyone see my screen?
Not yet.
Okay, you will momentarily. Just a second, please. I'll get the hang of this one of these days.
Okay.
So much easier on some of the other platforms, but let me try this again. And share. And What about now? What do you see now?
We're still not seeing your screen.
Still not seeing the screen. Okay, let me try it again.
Yeah, you have to first click on the green, and then you've got a selection of screens or application windows. Select that, and there should be at the bottom of the window, it says share or cancel. Once you've selected, you should be able to click on share.
I did click on share. Let me try it again. How about now?
Okay, yeah, now it's working.
Okay, what do you see? Do you see a seasonal chart?
Yes, we do.
Okay. So seasonal chart shows all September S&P futures contracts as one contract from the start of trading in 1983. We've taken every September contract, normalized the data, making the low of the year 0, the high of the year 100, so that no one year has an impact on the trend. So we basically normalize the trend and ask the question, on a weekly basis, what has been the normal behavior of S&P at this time of the year? So I'm going to take you here to July. Up until now, which is here, can you see my pointer now?
Yes, I see it.
Yeah.
Okay. The trend has been following exactly what the historical pattern has been. So we're right about here right now. So over the next week or two, the trend is clearly down historically. So I will have a downward bias, but I need a trigger to get me short the market. That trigger hasn't happened yet. I also want to know market sentiment. So let me change to market sentiment. And you should see that right about now. You see a chart?
We're still seeing the seasonal one.
You see, okay, hold on a second. Let me change that. Hold on one moment, please. Let me go back to the sharing and start it again. Bear with me for a moment. Start it again.
Hey, Jake, you want to just tell us what you're saying?
I want to show you market sentiment. It's very important. I don't have it right now. So do you see it now?
Yeah.
We see a platinum chart.
You see a platinum chart?
Yeah.
You don't see an S&P.
No, it looks like the E-mini.
So it's Trade Navigator Platinum something.
It's the E-mini I'm showing you.
Oh.
Okay. So
Okay.
bottom of the screen, very bottom of the screen, I've got a blue line. That blue line is small trader sentiment, a survey that we've done here every day since 1983, showing the percent small trader bullish or bearish sentiment. Here, for example, small traders were about 80 to 90% negative, correlating exactly to the day of the low. It took all this time for the small trader to become excessively bullish. Excessive bullish indication is a leading indicator for decline in the market. And that decline is happening now. The same thing happened here before this big decline. So the structure of the market right now is negative. The seasonal is topping. Small trader is negative. So if I have some timing to get me short, I'll be short the market and give you the prediction, lower prices over the next week or two. So I'm done with that for now. I'll stop there.
Okay. Anything else,
That's
Jake?
it. That's it for now.
Okay. Thanks a lot, Jake. So let's move over to Erik. And feel free to share your charts as well if you which direction you think. So Jake, what we understand is you think the market going down with what probability?
I'll give you an exact probability and show you some history in a couple of minutes.
Oh, okay. No problem. Okay, so let's go to you, Erik, then.
All right, very good. Let me share something we do here every day. It's something called TradeScope. So do you see that on the screen?
Yeah.
Okay, so with our options trading on the S&P 500, we're not trying to day trade or anything. We're not short-term duration or high velocity. A lot of the trading we do looks out maybe 80 to 30, 40 days, depending on the market environment. So a week by week type of approach, certainly something we do our best at, but we don't necessarily focus on that. But let me give it a shot here. You can see very simply, we like to keep it simple. I think Jake mentioned that too, in terms of looking at indicators and so forth. So we're looking at our short-term exponential moving average, the medium term, and the long term, and you can see the S&P is still well above all of those moving averages, indicating still a bullish scenario. The trend is your friend, as they say. And then looking at the various oscillators, we like to look at the RSI, the relative strength index, and that's approaching overbought territory, which is generally considered in the 70 area. We're up around 67 on the S&P 500. And you can see you had a buy signal back here when it crossed over, and it's been in a buy mode ever since. And here's the NASDAQ. We don't always look at that, but we kind of compare and contrast at times. So that's what we do here with a little more narrative on that. So all three of our trend indicators are bullish. And one thing to keep in mind, when I think there's a misconception about the RSI and even some of these other indicators like stochastics, when people claim they are in overbought or oversold territory, they might mistakenly say, well, that means there's going to be a reversal. But really, that's not the way to look at it. It just means that there could be a change in trend, and that could simply mean consolidation for a while. So just because you're very overbought, for example, on the RSI, doesn't mean to expect a massive sell-off right away. It just does mean you might want to look out for a change in trend. And now looking at another chart on the S&P, this is just a simple Fibonacci retracement, looking from the low here back in December after that massive sell-off, and you can see the rally we've had since. So we're still above moving averages, and we're close to all-time highs that were put in last week. Having said that, I do like Jake's comment on sentiment, and the whole world is bullish. Who's left to buy? So there could be a pullback here in the short term, essentially, touching some of the moving averages. You can see how along the rally here, the lows have just sort of skidded along the moving average here, and always kind of seem to bounce off that low in the recent months. So I would say that the dip should be bought. So, by the end of this week, I suspect we're going to be a bit lower, maybe hard to say, of course, exactly point wise, but I don't know, maybe another 30, 40 points lower by the end of this week. And then, I suspect the trend will continue higher. So that's my perspective.
So so you think at the end of the week lower, and what percentage do you think that's correct?
I would give that 75%.
Okay.
Can I
Great.
comment?
Sure, Jake.
Sure. For me, after all these years of trading, I need specific answers to specific questions. What to buy or sell, when, to the exact time of day, complete history, track record for every trade I make. If I don't have that information, I can't make the trade. So let me show you how I find the trade. I'm going to share my screen again, hopefully it's the right way this time. And let me know if you see it. You see my screen?
Yes, I got
Yes, I do.
So I'm going to go to one of my locations, seasonaltrader.com. I'm going to ask the question. For the month of July in S&P, so I'm going to go to the futures side over here and select S&P. One moment, please. Hang on 1 second. Almost there. Okay, so I'm selecting S&P. And let me know if you're seeing my screen live.
Yeah, we can see it, Jake.
So S&P selected, month of July. And I'm going to ask the question. Show me everything that I can do in S&P in the month of July that's been correct 70% of the time or more since the start of trading. So notice I'm not going back 3 years, 4 years, 5 years. I'm going back the entire historical database of S&P. I'm going to search for trades. Here's my search. And here's my specific answer. These are all the statistical probabilities historically on S&P futures in the month of July, which I can rank order by accuracy. Example, the top trade, which the computer has sorted on the top because it's the best trade, gives me 75% accuracy. Buying S&P September, end of day July 11th, exiting July 15th with a stop of 1.5%. My PL ratio and everything. I can pull up the entire track record right over here. Let me show that to you. Does everyone see the history now?
Yes.
The performance record. Every year, every detail, every profit, every loss for the entire history of the trade. So that's what I do. It gives me a specific answer. So that's my trade in exact detail. Now you'll notice some trades here have 100% stops. Basically, that means no stop, which is a beautiful way to trade an option because you know that your risk is limited, at least on a straight option, to the cost of the option and so forth. And you can structure strategies around these trades as well. So this is my way of doing things. Just wanted to share that with everyone.
Okay, thank you very much, Jake.
So there's a specific answer to the question. We'll see how it turns out. I will stop sharing now. Okay, I'm done.
Okay, thank you. So let me take you to my chart. And again, as I said earlier, I'm a complete chart-based trader. I trade, you can see my charts at the moment. I trade what I'm seeing at the moment. And I remember a number of weeks ago on the Timing Research show, I think we were together, Jake, and we were down here in demand and down here and down here. And I remember saying on that show, we could, and you said the same thing, we could reverse from here because we're in demand and we're still kind of moving up on the bigger timeframes on the monthly chart. And we're in demand here. And I remember saying there that if we move up and go above the 2,800 level, we're probably going to take out the highs. And that's exactly what happened. So I'm a trader where if you look at the charts, I say, if this happens and this is likely to happen, if this happens and this is more likely to happen, and I wait for one of those things to happen. So in question, is the market going to go higher here? Well, we're moving up over here. We're moving up on the weekly chart. And today we're moving down. And we've got an area of demand beneath us here, and we've got a previous pivot low over here, a significant pivot that pushed us new highs. So long as we stay above this area, we're still bullish. If we go below, we're probably going down here. If we break this, we break the trend on the daily chart, and we're probably going to get a steeper pullback. So that's what I can say. What's happening at the moment? Usually after, if you look at the weekly chart, after moves up in price, we usually get pullbacks. So this is a pullback for the time being. That's a viable pullback. And you can see that at the beginning of this week, we are moving down a little bit. And as Erik said earlier, we're probably going to get bought again, of course, until we don't. And if something changes, then we know something else is likely to happen. So what I like to do, and what I teach my traders to do, is keep their finger on the pulse of the market. So you look at the market, like Jake says, ask the question, what's the market doing right now? What should I be doing today? You can be in an uptrend, but the market's moving down today. So you want to be, if you're a day trader on that day, on the short side, you want to be selling supply or moves up into supply areas or into an area where you can manage your risk. So at the moment, we're sitting in demand. Yeah, and you can see the market's kind of pretty much chopping around here. Yeah. And if we do break this demand area, then, as I said before, we may go down. So I think, and another interesting thing to notice here, if we look at what I've noticed many times, this move up started off with a big bar this week. Yeah. So generally, if we do retrace back, it's unlikely we're going to go below here if we're going higher. If we start moving into this area, into this bar on the pullback, then it's more likely we may continue to be going to the downside. As you can see here, we came back into this and moved to the downside. Yeah. So this is a pretty powerful week that we had, and we moved up. So if we do retrace, the likely area is probably somewhere down here. Again, probably around 2,860, 50 area, somewhere around here if we do pull back, and we'll watch and see if that's going to be a viable pullback. So I think at least short term, maybe this week, we may have a move down that will likely get bought. That's what I think at the moment. Does anyone want to add anything else to the market at the moment? Or we'll move on to the next question. Okay, so anything else?
Well, I had a question, Simon. Are you looking at Fibonacci retracements at all?
No, I primarily focus on three things when I'm trading on multiple time frames. I look at supply and demand zones, which I've trained myself to recognize over many, many years of doing this. Basically trial and error, put a zone, this is demand. Oh, the market goes straight through it. Why? Oh, this is demand. The market turns there. Why? To get it down to a kind of where I know where those levels are most of the time, and they're pretty high probability turning zones, not points, turning zones in the market. And one of the other things I look at is trend using the candlesticks alone, using pivot analysis, not traded pivots, but the actual candlestick pivots. And I use that to identify uptrends and downtrends and when the trends begin and end. So I know exactly if I'm in an uptrend and it suddenly came to an end, and I know how to recognize that. It's exact. It's not like, oh, it could maybe. It's an exact. The trends come to an end. I'm in a supply area potentially, and then that is maybe a good area to look for a sell. And the next question is, where's my next opposing demand area, which is the likely target, or at least first target? Where can I move to? Is it likely to move down in a fluid way, or is it likely to hit demand, push up, and then go lower? And this is what I look at with how price moves. It's the mechanics of price movement, and using that to figure out the probabilities. And another thing I look at, the third thing, is price direction. I want to know if I'm in which direction price is moving and on which time frame. So we have direction lined up across the time frames. For example, to the upside, then we know the price is moving up, and it will continue moving up most likely until it hits the supply zone. If it breaks the supply zone, it will continue. If it hits the supply zone, it's probably going to come down. In the context of an uptrend, that move down will get bought and it will continue higher until it doesn't. If it doesn't continue higher, that means the trend has ended, and we may have a reversal or a steeper pullback in the context of an uptrend. So I'm looking at three primary things. I'm looking at areas of supply and demand. I'm looking at price direction, like which direction am I currently moving in, and pivot analysis to identify trends and when they begin and end on multiple time frames. So for example, you can be in an uptrend on the daily chart, but currently a downtrend on the hourly chart. So if the downtrend on the hourly chart comes to an end in a demand area, demand zone, in the context of a demand zone, or where I think the pullback's likely to happen on the daily chart, and this is a good heads up that the trend's going to continue to the upside on the daily chart, and I'm buying low, and as we do, sell high. So that's what I'm looking at. Nothing to do with Fibonacci's. I can see everything. And what you find primarily, if you did put the Fibonacci retracement tool on, or extensions or whatever, you'll find that they line up with the supply and demand zone. So you don't need both. And for me, having the least information on the charts as possible means you've got, you can make better decisions. And for me, price is king. Price tells me everything I need to know.
Simon, question for you, if I may.
Sure.
Why stop at the hourly chart? Why not go down to the 1 minute chart?
I used to go down to the 1 minute chart. I go down 4 hour. And you see, I've got like, I go down to the 5 minute chart now. And sometimes I put up the 1 minute chart when I want to see really fine detail. So again, I go all the way up to the monthly. So I'm looking at all the time frames, depending on what I'm trading. If I'm taking a swing trade, then I'm focused primarily on the daily chart and the levels and the weekly, and maybe entering on the hourly. If I'm day trading, then I maybe focus more on where the hourly is and the levels, and I'm entering on the 5 or the 15, or sometimes the 1.
Thank you.
Yeah, so I'm taking the whole complete picture. So I know, if you're buying in the context, for example, of an uptrend on the hourly chart, or on the 5 minute chart, and you're hitting up against a supply level, well, that may be where that uptrend fails, and that's not the highest probability place to enter the trade.
The thing that I do so often in my work, Simon, is I get calls from people and they say, Jake, the monthly trend is up, the daily trend is down, the weekly trend is sideways, the seasonal is bullish, the hourly chart just turned bullish, the 15-minute chart is bearish, what should I do? So I always say, get a good psychiatrist because you'll need one. For me, it has to be much more simple than that. I understand your style. I've done that and I've been there, but it's very difficult for me to do that. So I'm just a numbers guy. I know that we're playing the odds. If I know the odds, then I know what to do. But again, everyone has their own style. And as you said before so brilliantly, you have to find what fits with your style. Otherwise, it's not going to work for you.
Sure, exactly. You need to find what works for you. This works for me. I've been doing it for many years, and I used to only look at when I was more day trading. I'd look at the hourly chart, primarily hourly chart, 5 minute, hour, 15, 5, and 1 minute chart, for example.
Yeah.
I didn't need anything. I didn't look at anything else. But then I used to have a setup for swing trading where I'd look more at the weekly, daily, and the 1 hour. Yeah. So I decided eventually, instead of flipping backwards and forwards between different setups, I just put the whole lot out, and then I'll just focus in on what I need to see. So this is the point. Otherwise, you can need a psychiatrist if you because there's too much conflict. So you have to know what's important and how to reconcile that. So you have to look at what's relevant to the trade that you're doing right now. If you're trading on the 5 minute chart, or the 1 minute chart, if you're entering on the 1 minute chart and trading between levels on the 5 minute, and then looking at the monthly chart is pretty irrelevant for that type of trading. If you're scalping, you don't need to know what the monthly chart is. It's irrelevant.
Yeah, in my old age, I've gone in the opposite direction. I've gone from the complex to the simple. I'm just a numbers guy. Show me the numbers. That's my trade.
So you're looking at the proper, for what I understand, you're looking at trades that have worked in the past and then waiting for them to set up again, and then looking for
trigger.
I guess just for it to set up and take it based on probabilities of what's happened in the past.
Yeah, I need the setup to become a trigger. So I use a timing indicator to say, yes, this has happened X percentage of the time in the past. I now have a trigger that is going to repeat. There's my trade. I understand what you're doing.
Yeah. That's good, but you need to have, you need to have a whole system to do all that, I guess, analysis for you.
It's a cookbook.
Yeah, you need access to all the data and be able to kind of munch the numbers and know how to do that in the correct way, and then
Well, as they say, past performance is no guarantee of future results, but sometimes the past does rhyme with the future. So.
Yeah. Okay, so let's move on now to our next question, and it's an interesting question. I think it's the first time we've had this question on the show, or first time I've ever seen it. Is what indicator influences your trading the most? Let's start with you, Jake.
Momentum. The momentum indicator is the best indicator there is. We look at divergence, price and momentum going up together, normal. Price going up, momentum going down, abnormal. I'm interested in abnormal situations. Normal teaches me nothing about the market. I want to see when there's something abnormal, and momentum is the single best indicator I know for determining when things are abnormal. So that's it for me.
So when it's abnormal, just a question, when it's abnormal, that means there's a reversal's about to happen?
Exactly.
And do you want to take those reversals?
Yes, on a trigger. So use a specific momentum divergence trigger. Those are some of my best trades. My second best would be seasonality, which has never failed me in the long run. In the short run, it won't be perfect, but in the long run, it never fails me.
Okay, that's good. What percentage, what's the kind of batting average for that momentum indicator? How
Well,
many times does it?
according to my methodology, will usually reach its first target within several days or several hours if you're doing it intraday. So the batting average is well over 70%. But the thing that's most important is the ability to maximize profit. So I'm trading basically as a risk manager. I want to get out of danger as soon as possible, reach my first target, then I have effectively zero risk, and that's where I make my big money, is the trade that occurs after I reach my first target.
You just let it ride as far as it goes.
Absolutely. The biggest mistakes I've made in my trading career is to take the money off the table too soon, and I hate when that happens.
You know, that's an interesting thing. I was telling my traders, like, if you're in a trade and you've got profit on it, and you close a trade too soon, and then you just watch it go more and more and more, that's pretty painful, yeah?
Oh, it's terrible.
For a trader, yeah. So for me, and probably for you as well, I don't mind taking a losing trade. That's okay. I'm okay with that. But I do mind leaving money on the table when I get out, sometimes too early. And so having something in your management policy that enables you to stay in the trade and let the market take you out, if you can kind of trail behind it, locking profit on the way, is probably a good thing to do. And it looks like you're managing risk at the beginning to take yourself out of risk, so you have a risk-free trade as soon as it reaches that first target. And I would imagine if it turns around and then goes and stops you out, you've still locked in some profit on it.
Exactly.
Or at least you're not going to take a loss. So.
And I do that with multiple positions. So I keep some and I scale out of some. Very simple. So my job.
Sometimes add back in again. You sometimes add after you scaled out and you see the trades going and you've got another entry into it. Do you add back in what you've taken out?
I will add back in, but I will teach that. I will treat that as a separate trade entirely with its own stop and target.
Yeah. Okay, that's great. And Erik, let's go over to you. What's your favorite indicator?
Well, I think Jake is saying the same thing that I might say. I might just say it a little bit differently. For example, if there's an extreme divergence between some of the indicators we like to look at and price, that gets our attention. So I don't like to look at anything in a vacuum. And also, I like to use candlestick charts. I know I saw you were using those too, Simon. I think those are very visual and they're compelling and they give a lot of information at a glance. You can see patterns and setups a bit easier with candlesticks. At least I can, the way my mind works. But something like a simple RSI that might be at a certain level, and if you don't see price confirming that, and you see the indicator price is making a new high and the RSI is not, that is definitely something to monitor. And there's a good chance there that prices will at least slow down and consolidate, if not correct in the very near future. And of course, the more extreme that is, the more likely that is to happen. So something we like to look at. And one thing to point out too is I mentioned we do options and we do option spreads, and the type of spreads we're trading are mostly non-directional in nature. So we kind of have some wiggle room with our style of trading. We're not necessarily looking at an exact specific price on the S&P as an entry and a price, as a stop and a profit target and so on and so forth, because we have non-directional option spreads working, and that gives us a lot of wiggle room, as we like to call it. And of course, we have theta decay, hopefully working on our side moment by moment, as options are a wasting asset. So, while we do definitely monitor, obviously, the markets we're trading very, very carefully and closely, we're trading them just with a different vehicle, a different instrument, a different style. We kind of talked about doing what suits an individual. There's a lot of ways to do this, and over the years, this is something we developed, and this sort of suits our mentality and our client base as well.
Can I say one more thing?
Sure, Jay.
Another indicator that I developed is the daily sentiment index. That's a survey I showed earlier indicating the percentage bullish sentiment of small traders. About 47 of the world's top hedge funds subscribe to that service and get it every day. But I want to stress something very important. There's been a popular misconception that the small trader is always wrong. That's not true. If the small trader was always wrong, they wouldn't play the game. The small trader is only wrong at major turning points when there's strong agreement. So when we look at market sentiment, and I'm getting 90% agreement in a particular direction, 90% of the traders believe it's going up, 90% believe it's going down, that's when I get my significant market turns. So my third favorite indicator is daily market sentiment, which is available through me at my website, Bernstein.com.
Thank you, Jake. So you're using that as an indication when the majority of people are saying up that you're going to look for a reversal.
Exactly, and it's very much, it's a leading indicator. It's one of the few truly leading indicators that I know of.
So Jake, how does that work or look like in relation to the like the CNN Fear and Greed Index, if you're familiar with that one?
Yes, I am. We're going only to very small traders, traders that are most likely to lose their money very quickly. So I don't know how the CNN gets their index Fear and Greed, but by going to the small trader, uneducated trader, the trader most likely to lose their money, it's where you get some very accurate readings.
You know, Jake, that reminds me of a story of my early days on the trading floor. This was like 15 years ago, whatever. When I first started out, there were two big traders on the floor, like massive traders. They were up every day in the first of I was trading the U.S. Equity market, the New York Stock Exchange, yeah. And these two traders were up every day, somewhere between $2,000 and $10,000 within the first half an hour, every single day. So I used to sit there and I'm like, I'm buying and I'm taking this trade. And I used to walk past these traders and they were on the other side. They just took if I'm buying, they're selling. They just didn't look. They just, so I was the kind of sentiment indicator on the opposite. Because I was a newbie trader on the floor. So newbie traders don't make money at the beginning. Most of them don't, unless there were actually, it's interesting. Be interesting research to do. The ones that lost at the beginning, like myself, and then became successful afterwards, and compared to the ones that started out making money and then blew out afterwards, and they're not in the game anymore. Absolutely. It's kind of interesting. I think it's better to start the game losing, because then you work on it and you figure out what's not working for you and improve, as opposed to having that beginner's luck.
I've found that to be absolutely true. That's brilliant and absolutely correct.
Yeah, so that's an interesting research to do. But there you go. That was the counter indicator. Whatever I was doing, they would do the opposite until the stage where I started to.
But Simon, here's the question now: are you still that indicator?
Say what?
If you're still the contrarian indicator, I'd like to get in touch with you.
Yeah. I think we've all felt like that at times.
Yeah, absolutely.
Yeah. No, I have a pretty good read on the market nowadays. Pretty accurate. Someone actually who has a PhD, he was a postdoctoral research guy, went through my videos on where's the dollar going next and analyzed them. And he said if he would take trades based on what I said on those videos, it's pretty accurate. He's actually in a true PhD style, kind of put all the numbers together. You'd like it, Jake. And if you can do that for me on a regular basis, that would be great. And you'd have really, see how accurate what I say is. If it breaks this level, it's likely to go to this level. If it turns here, and then wait to trade on that. Breaks this level, okay, let's go on the long side, take it up to that level. So this is what he did. He went through all of those videos on what I said and say, can I trade on it? Would I make money? And the question was, yeah. The answer for that question was yes.
Let me share an interesting and funny story, actually very sad. When we first started our survey back in 1987, we had one individual who was always wrong. Every trade he took, every trade he made, he lost money. We reached a point where we knew what he was doing, and probably unethical. We would do the opposite, and it always worked. One day he called us and said he was going to quit. He's never going to be successful trading. He ran out of money. We had an important decision to make. Let's send him some money so he can keep trading, which we did. So that was our primarily contra indicator that gave us some very good trades because he was never right. So that does happen, actually.
Wow, that's kind of fascinating. It's like sometimes when you tell beginning traders, whatever you want to do the opposite. You want to buy, sell, do the opposite and then go. But it's very hard to do that. I mean, if you could work together with someone a novice person who doesn't know anything and ask him what to do, and then you do the exact opposite, then you'd probably do okay.
Well, Well, I sorry to interrupt, guys. I was just gonna comment. It made me think about, a lot of times I found that the trade itself, at some point was probably profitable, but then they mismanaged the trade. It's difficult to enter a trade and have it, immediately turn into a loser and never show any profit at all, and over and over and over and over. Just statistically speaking, but I think what happens most of the time, in my opinion at least, is that people mismanage their positions, and they'll turn a winning trade into a losing trade, and we've all seen that happen, of course. And they start talking to themselves and talking themselves into or out of various moves that they should or shouldn't make. And
Sure, Eric.
maybe they've entered a position, and now it's a little bit profitable. Well, I'm going to go for a little bit more, and they don't do anything, and then it turns against them, and now it's a little bit down. Well, it's going to come back, and they rationalize it. Well, now it's a little bit worse. Well, it's got to come back because there's a XYZ report coming up around the corner. I'm just going to wait for that. It's not too bad. And then all of a sudden something happens and it gets out of hand, and they think, well, now I can't take the loss because it's just too big. So I'm just going to hang on it and do nothing.
Eric,
So
I think we call it micromanagement.
It happens a lot. So I mean, that's
why you need a plan.
Well, I always
works.
Take the trade, turn off the screen, go do something productive with your life, accept the loss before you take it, and then everything will be fine.
And repeat. Yeah. Okay, so let's, I'm going to answer that question. My most, I guess, was the question about indicators. How are we? Yeah, which indicator influenced me the most? Price. I mean, price, Japanese candlesticks, if you call them an indicator, but basically Japanese candlesticks and price. Price is tells you everything you need to know. Price is king in the market, and you can see based on what's happening now, what's likely to happen if the market does something. So I'm looking at price, and as I said before, I'm looking at trend, using pivot analysis, supply and demand levels, and price direction. Which direction are we currently moving in, up or down? So those are the things that I look at. Let's move to the next question. Anyone to share any trading idea with the audience? And if you have any trading ideas, let's share them. So let's start with you, Jake. Any trading ideas coming up?
In terms of futures, watch very closely. One of the important indicators that I use, Commitment of Traders report. A market that I've rarely traded, orange juice futures, is showing a very interesting pattern. We now have the largest level and extent of commercial buying of orange juice futures in history. These types of indicators, commercial buying activity, usually precede major moves up. So even though I don't trade OJ, look at it, it's worth looking at, simply because of what professionals are doing. They're anticipating a weather, they're anticipating a weather market which could be explosive. As I said, not actively traded, but worth looking at. So that's my trade idea.
Okay, thank you, Jake. Let's move over to you, Eric. Any trading ideas you'd like to share?
Well, I could spend just a second here showing you what we do with our options and give you an example of that. So hold on just a second here, if I can share my screen. Okay, can we see that?
Yes.
Yeah.
Okay, it's our Theta Trader platform. We're looking to primarily sell options and collect premium. These are covered spreads. And, for example, you can choose your outlook here, bullish, bearish, or neutral, and then we'll pre-populate all the various spread strategies. And then we have an algorithm that generates the actual spreads themselves. So I won't go into all the details, but let's say you're wanting to place an iron condor trade, and here's all the various trades available based on days till expiration. So, maybe you want to go far out in time. Here's one with 75 days of expiration.
So Eric, for a second, are you basically selling premium?
Correct. We're collecting premium. We're selling covered spreads.
Got it.
So essentially, this is what the algorithm tells us to do. We're selling the 2680 puts, and we're buying a 2660 put below it. I'm selling a 3190 call, and buying a 3210 call above it. You can see the deltas here, 9.8% and 6.37% on the put and the call that we're selling. So it's approximate probability of these options expiring in the money. So we'd like to, depending on the market environment, the algo is going to pick probabilities probably at this level, sometimes a little higher, sometimes a little bit less. And you can get an idea what that trade looks like here by looking at the chart. So you can see when I mentioned wiggle room earlier, there's a lot of upside here, a lot of downside that can happen, and still this particular trade could work out profitably in the end. But of course, it may not either. And we have, I'll show you that in just a second here. If I can close this here. I just loaded up a simulated trade. We have a simulator as well. And here's a trade from October 2017, and we have these buttons where you just press play and rewind like an old tape recorder. So you can see here as we press play, just sort of simulating and back testing. And you can see this green here. That's our color code, risk management, profit management. Green means do nothing, just sit with the trade as it goes day by day. So basically then it touches blue, and blue means take your profit. So that's where the algorithm says take profits. So you'd be out of that trade theoretically. But if you kept in it, notice what happens here. It turns red. And red means get out and take your loss. So you would have taken a loss had you taken a winning trade, held on to it, not taken your profits when triggered, and then you'd have the red hit you here, and then you would take your loss. So that's why we like to make sure that we automate these things. Like Jake says, go on with your life, do other things, try to automate things as much as you can. And that way you don't end up allowing your emotions to get the best of you and having your emotions trade you and having the market trade you rather than you trading the market. So I don't know if that's helpful.
Beautiful work, Erik. As a numbers guy, I can't help but love this.
There's a couple more simulations if you want to see, but I'll let you guys decide if you want to see them or not.
I think that depends on time. How much time do we have left?
Let's move on. If we've got time at the end, we'll do it.
Perfect.
Okay, so I'm going to share my screen again. You should be able to see it now. So I remember talking again, gold, when we were down at these levels down here. And I said it looks like we're going to break, and this would be what I'm looking for, the break here above this base, which we've done now. And looking for it to move. I'm still looking at to move up to the 1600 area. So it's pulling back now. If it doesn't hold this level, we're going to get a steeper pullback, maybe down here. I'm looking for the pullback. I'm looking for a reversal. I'm looking to continue up this trade up to the 1600 area. And that's just based on how I'm reading the market. And here I knew it was ready to go. And this was a very nice month, like a $100 move, and just over $100 move in 1 month to the upside, which was a nice move on gold. And again, once it hits here, if we again hold this, we may continue moving, but I think it looks like we may get a pullback here down to the previous level below where we broke out, and then we look for a reversal here potentially, or maybe lower, to continue playing to the upside. That's what I'm looking at the moment. Again, the trade was initially talked about when we were down here before this turned. Okay, so let's move over to the last question. So we're going to go through we'll start with Jake, and basically any closing thoughts or final statements about your sites, and anything you want to add about anything that's going on, please do it now, and we'll conclude.
It took me 15 years to learn how to trade because most of the things that I learned were worthless. 15 years.
Wow.
There's a lot of useless information on the internet. The good news is there's a lot of information. The bad news is most of it is useless and distracting and completely wrong. So anyone who has not traded before, make sure you get the right education. Make sure it's objective and not subject to opinion or interpretation. One of the things that's bothered me most is this. take a chart, teach a methodology, show it to 10 different people, ask a question, have them give you an answer without conferring with each other, you'll get 9 different answers. That's the thing that's not right. It has to be completely objective or it doesn't work for me. That's my parting thought.
Okay, thank you, Drake. And let's move over to Erik.
Well, I think I can partially summarize my career with the short sentence, and that would be know where you want out of the market before you get into the market. So I would maybe write that down as a slogan and keep in front of you if you're new to trading or even if you're not. And it's easy to forget sometimes when you're in the heat of battle or you get too excited about something and or you hear a lot of chatter, from everywhere, right? We are assaulted with information. Like Jake said, there's a lot of information. A lot of it is just, it's just noise. What do you do with, look at the front page of any periodical on investing, any business channel, and you're going to hear expert pundits say the market's going to crash. And in the same sentence, someone else chimes in, well, it's going to rally stronger than ever. And, that happens all day long, all throughout the day. And of course, that opinion makes the markets. But, how do you sort through all that? So that's part of why we did what we did with our strategy. And we tried to make something that was basically generally very complex, multi-leg option spreads, and boil it down to the basics and take those trading decisions as much as possible out of someone's hands. So they have something that can, you have something to sink your teeth into. You can basically see the trade set up, and you can have it accommodate whatever outlook you have, and then you can have it automatically managed from there. So I think no matter what your strategy or what your approach, it's got to be repeatable. It's got to be scalable. It's got to be simple, or else you're not going to do it. Or if you do it for a while, you'll get burned out if it's too complicated, too time consuming. All these images you see in advertisements about people with, 100 monitors around them and they're sitting there all day long. I don't know. I don't think many people want to really do that. I mean, I think you want to just have a methodology that you've developed and you stick with it, and it's gonna have to work for you and have to make sense for you.
Okay, thank you very much, Erik. So over to me. You can go to my website for more information, TradeSmartForex.com. I have a little video here. If you could subscribe and put your details in here, that's my email address if you want to get a hold of me. And in that, there's a 15-minute video which will teach you how to go about building your own trading strategy, again, based on whatever your edge is. And we have this week on the 10th, on Wednesday, I'm doing a live market analysis using supply and demand. So I'll go into a little bit about how to recognize where those zones are in the market. We'll look at the live market as well. And so that's what's happening this week. Come and join live. I haven't done this. This is one of my most popular webinars because it's, it's a different market every time I do it. And you'll get some trading ideas potentially as well. Some people have actually traded on it and made money as we were doing it. And which is good. They sent me back, just made $2,000 trading that idea. And I'm like, okay, great. But again, that's not everyone. And again, obviously, if you take any ideas from there, you trade at your own risk. That's one of the most important things that you need to understand at the beginning is you're responsible for your trading right at the beginning. If you blame it on other people, then you'll never do what it takes or what's necessary in order to make the changes within yourself to become a consistently profitable trader. So I think we're kind of out of time now, pretty much. So I'd like to thank Jake. It was great to be on the show with you again. And Erik, for the first time here, it was great to hear your words of wisdom of the market as well.
Yeah, thank you for... Oh, I'm sorry. I said thank you for having me. And just real quickly, I forgot to mention we do have a demo account if someone wanted to sign up. You could go to cf.altavest.com/TT free 30. And you should be seeing that on the screen. So that's all. Sorry to interrupt.
No, perfect. Thank you so much. And I'm going to pass it back over to David. Thank you so much, everyone.
Before we do that, been a pleasure being with you guys. You do great work. I love it. If anyone wants to reach me, jakebernstein.com. Thanks.
Thanks, Jake.
All right.
Thanks.
Yeah, thanks, guys. Great discussion. Lots of great info. So just a quick reminder to everyone watching, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory. You can also go to TimingResearch.com to get access to any of the past reports or the show archives. And be sure to join us again tomorrow for the next episode of Analyze Your Trade. And that'll be at 4 p.m. Eastern Time. And you can always get the live access to the live recordings at TimingResearch.com/live. And Larry Gaines, Jim Kenny, Matt Buckley, and Anka Metcalf will be on for that one. And I just want to thank my guests again for today. Erik Gebhard of altavest.com. Thank you for joining us for the first time. Also, Jake Bernstein of trade-futures.com and Simon Klein of TradeSmartForex.com. Thanks, everyone.
All right.
Dave.
Thank you. Thank you.